And I think we need to say a note that we are holding this meeting according to the governor's emergency order, and it is being recorded. Did I get it all? Okay, then let's start with a roll call, please.
Trustee Clayton,
Here.
trustee Dickon,
Here.
trustee Eastwind,
Here.
trustee Haber,
Here.
trustee Hollander,
Here.
trustee Jamerson, President Ford.
Here.
Thank you.
Well, the first item of business is the finance workshop. And so at this point, I'm going to turn the meeting over to trustee Clayton for his guidance through the presentation.
Okay, give me 1 second here to get the presentation up there. Can everyone see that?
Yeah.
And trustee Clayton, can I ask you to watch for questions from the trustees?
Yeah, I was going to say, Chris, that it's because I'm looking down at my notes and I've got this in front of me. I would just say if people have a question, just interrupt. Otherwise, I'll probably just keep going.
And I'd like this to be the questions from the trustees only, and when the trustees have been completed with their questions, if there are other things that go on. Naturally, our consultants are welcome to chime in as well. Thank you.
So the topical agenda for tonight is covers a wide range of different aspects of our financial situation. We have come from a period of surplus to the loss of a large sales taxpayer to the pandemic. And at this stage, we hope we're at the first stages of recovery and then steady state. We have a lot of things to cover in terms of forecasts for the year and our cash position and so on. But we want to start with the presentation of the 2020 audit by Miller Cooper. So Betsy, you're on. If you want me to take down the screen sharing, let me know.
No, I have my notes. I don't have anything to share on the screen. So I assume you shared the letters and the audit report with the remaining trustees and consultants. So they have that as I'm going through it.
Chris, I don't know who has the audit report.
I could forward it to anyone who wants to screen share it. I have it.
Well, let's start by asking which do trustee Haber, trustee Eastman, trustee Dickon, do you have copies of the audit?
I'm looking right now.
I do not believe so.
I don't believe I have it either.
Okay.
The conversation, Mike asked me just to take a few minutes to do this, is pretty general over what's in the financial statements and just sort of reviewing, the letters that we issued. So I'll just do that if that's okay. And if people have questions, you can either interrupt me or ask them at the end, or otherwise, if you have questions, after the presentation, you can certainly get hold of Mike and he can certainly, come to me and get answers, to those questions. Will that work for everybody?
Yes, thanks.
Okay. So I'll get started. I know you have a lot on your agenda tonight. So the three things I want to go over quickly are, the bond financial statements that were released, along with our management letter, and then our required communication to the board letter. I just want to point a few things out. The first thing in the financial statements, when you look at them, that I want to point out is the village did change their method of accounting this year. In previous years and for many years, they've reported on the cash basis, modified cash basis of accounting. We did change the method of accounting to the modified full accrual basis, which is now in conformity with GAAP, with generally accepted accounting principles. So that's a big step, that the village took this year, and a big undertaking. When you look at the report, probably the most important part of the financial statements you'll see is our independent auditor's report, our opinion on the financial statements. This year, again, it is unmodified. report, which is the highest level of assurance that we can give as auditors. You will see in the opinion that there is a note in there on the change of accounting basis because there was a restatement due to this. So it's a restatement due to a change in accounting basis. There was also the implementation of GASB 84, which is where you did an analysis of the agency funds that we used to carry. And due to that analysis of the agency funds, they're now carried as part of the general fund. So you will see that in the opinion that those couple things are spelled out. So part of when you change your method of accounting, like I said, you'll see throughout the document that the fund balance and the net position are all restated. There is a footnote, note O, that is in the financial statements that shows the restatement of all the funds and what was restated in the net position. Like I said, in order to do the change in accounting basis, you have to go back a full year and figure out all the modified accrual, full accrual entries for the previous year in order to restate those numbers moving forward. Another thing that you'll see is a little bit different, and I know not everybody has a document in front of them. On page 5 is the statement of net position. There we've always reported the non-current liabilities, which are mainly the SSA bond money that's being paid back. But now with moving to the full accrual basis, that number also includes your IMRF net pension liability and also any compensated absences that would be owed out at the end of your calendar year. And if you look at note D and I within the basic, the notes to the financial statement, there's additional information and detailed information on that IMRF net pension liability, as well as the compensated absences. The remaining statements that we refer to as our basic financial statements that are on page 5 through 15, are the same as you're used to seeing in prior years, except that we did, as I said, a bunch of time to change the accounting basis. So you will see some additional information presented there. Then on pages 16 through 56 are the notes to the financial statements. This is where you'll see a lot of the village's summary of significant accounting policies. There's a lot more detailed information on the debt and the capital assets of the district. Again, I said there's the note on the IMRF pension liability that discusses the actuarial methods and assumptions that are used by IMRF actuary to come up with that liability, as well as the note on the restatement due to the change in accounting basis. The remaining part of the document contains many budgetary schedules. Each fund that is reported by the village has a budget to actual schedule for the year. There's also the combining schedule of the non-major funds, along with the debt retirement information for the retirement of the remaining outstanding debt. So that's just sort of a quick overview of what's in the financial statements. We're already well into your next year. So, where you ended the last year is sort of, I guess, old news. And I know, Mike, it looks like you have a lot of forecasting to present. So I think that's probably the more important information to look at there than where you ended 2020. Are there any questions on the financial statements? Then we did issue a required communication to the board letter along with our control deficiency letter. When you're issuing a control deficiency letter, there's different kinds of control deficiencies that you can have. You can have a material weakness, a significant deficiency, a control deficiency, and also a management advice. Within this letter, we did report 2 material weaknesses, and one was in regards to the bank reconciliations. That during the year there was not a process in place where there was that there was a process in place to review the bank reconciliations accurately and timely, and therefore there was a variance at year end. We weren't able to determine during the audit if that was carried over to the next year, as some of the bank recs hadn't been prepared for 2021 yet. The amount wasn't material, So we left it, and the village will be able to make an adjustment for that amount if they find that that's the appropriate thing to do. The other material weakness that we reported was in regard to segregation of duties. And please keep in mind, when you have a small village such as Riverwoods, a lot of small places have segregation of duties issues, and you need to, look at your processes and find some processes in place that have some mitigating factors, for the segregation of duties. But during 2021, the finance department pretty much had one person that had full access to the general ledger, was doing all the IMRF reporting, the payroll processing. And so you need to, ensure that there's proper, you won't always have proper segregation of duties, but at least that you will, have proper reviews in place to mitigate, any errors or any that could be found. Another deficiency that we reported was just in regards to itemized support for employee reimbursements before you're reimbursing an employee. When the village wasn't able to find the receipt, they did go back to the place where the receipt was and did subsequently get a receipt for this, but it's more or less reporting that it's very important to have all the proper documentation before you're reimbursing an employee. And then a control deficiency that we reported was in regards to employee vehicle allowances. Employee vehicle allowances are supposed to be paid for on a employee's W-2. If you're paying an allowance, it's a W-2, not paid through accounts payable. If you're actually reimbursing, for mileage or certain expenses that they're turning in that way, yes, that would be an accounts payable. But when this is an actual vehicle allowance, that's part of somebody's contract, it needs to be showing on their W-2. And then lastly, there was about $395,000 district deposits that weren't fully collateralized at year end. And this too could have some to do with the timing difference. This is at one point in time as of 12/31/2020, when you had more than $250,000 that would have been FDIC insured. But we're required to put that out there, and just to let you know that there was a point in time where there was some uncollateralized funds. And then the last comment on here is just really in regards to technology and data security risks. This is a comment that we put in all of our clients' letters. It's really just so that you're always aware of, things are always changing. Technology is very important, especially with the remote working that was going on during 2020, and also with the number of, people you've had in your finance department. You want to make sure that all the data security, the privacy settings, people's passwords are always being watched, and certain things are closed when certain people leave. And then lastly, we have our required communication to the board letter. This is really discusses that we did the audit in accordance with generally accepted accounting principles. We also did it in accordance with government auditing standards. Second page of it discusses any of the GASB statements. GASB is the Governmental Accounting Standards Board. It discusses the GASB 84, the fiduciary activities that we implemented this year in regards to the fiduciary activities. There's also a complete listing of any GASB statements that will be applicable for future years. The big one for next year is the recording of leases. So that will change if the village has any leases that have to be recorded. This letter also discusses any of our significant accounting estimates and financial statement disclosures, and also discusses that a management representation letter was signed by management and the board when we released the reports. And I know I saw Nicole on here somewhere before, and just want to thank her very much for all her assistance in getting this audit complete. I don't think we could have gotten it done without Nicole being there, so I want to really say thank you to her. She was a great help. So does anybody have any questions?
This is trustee Hollander, and I have a couple of questions. My
Okay.
understanding is that this was a letter that you sent to the board. Is that correct? And that this letter,
Uh,
and that this letter had a list of deficiencies that you wanted to at least call to our attention? Is that true?
Correct. The letter
would-
addressed.
Then I have a question to our mayor. Did this letter with the list of deficiencies ever get sent out to the board?
No, Henry, it has not. There were a lot of back and forth emails at the very end. It was unclear exactly when this was filed to me. And so I'm sorry that it did not get to you before this meeting.
No, that's not really my concern related to the meeting. My concern is if there is a list of financial, at least
You will
points.
be getting, you will be getting it because we do need to address it. The board does need to talk about it. And we will be sending you a copy of the letter.
What was the date of the letter that was sent?
I don't believe it's dated.
September
The
23rd,
report- The
September
reports were released
23rd.
on September 23rd.
Okay,
September 23rd.
I guess,
I didn't get
concern-
these. I
my
did
con-
not receive them on September 23rd, Henry.
all right. My concern is that if there's a letter sent to the board
Yes, your
with,
point
a-
is,
with a list of deficiencies, the board needs to see it, even if it's covered by saying, we're going to look into it and get back to you in a week or two.
no,
Okay,
that's not what I intended. That's not what I intended.
Actually,
When we,
Henry,
when,
oh, sorry.
I'm going, so
Actually,
when the
Henry,
report,
the village is required as part of the process to respond to the material deficiencies and say exactly what we're going to do in response to what was identified. And since all of these deficiencies occurred before Lauterbach and Amen was on board, a lot of the answers to their concerns rest with the hiring of Lauterbach and Amen. The other thing that's important here is that it's very much in the mayor's focus point at this point to look at the fundamental processes within the village and their controls. And there's a meeting on September 13th to begin to try to see how we might modify those processes and controls to fit in with what the auditors have to say. So we have either corrected everything that was in the letter or with regard to processes were in process.
yeah, I don't want to leave the impression that that's my concern. My concern isn't the fact that we're not doing the right thing or that you're not responding. My concern is that the board has not been notified of deficiencies, and I understand that there's a process in place, but I would have liked to have received this letter with a note saying, we're working on it, we'll get back to you.
Henry, I do apologize. The board should have gotten a copy of this letter. The only thing I can say to you is that there were a lot of back and forth, and it was unclear to me exactly when and if it was filed. And there were lots of back and forth at the very last minute with a variety of emails, Henry. And so that's the only reason I can give you, and I apologize. And we will send the copy of the letter out to everyone on the board tomorrow.
I want to ensure that, the day the report was released, that these were sent electronically, through our portal to you, and to make sure that you have them electronically to share with the board.
That's true.
Are there any?
Well, to that point, I have an email on September 24th that says, would you be able to send me the adjusting journal entries and trial balances? And there were lots of back and forth emails like that as well.
Any other questions for Betsy? If not, this was a lot of work and it took a lot of time. And Betsy, we appreciate your efforts on behalf of the village. Thank you.
Great, thank you. Have a good evening.
What's going on here? Whoop. Okay, what I want to move to next are some underlying foundation points that you'll see throughout the presentation tonight that really guided our efforts as we put together these projections. And first among those is some new policies with regard to fund management and what our targets are within the various funds within the village, the general fund, capital fund, sewer fund, and so on. And I think I'd like to ask Wes, who's the partner from LNA on our account, to kind of take us through that a little bit.
Thanks, Mike. I know I haven't had the opportunity to meet everybody on the call, so just a little background on myself. As Mike said, my name is Wes Levy. I'm the director of our financial services team and help oversee our accounting finance team out at the village. So Nicole and Roger, who are both on the with us at the meeting today. And as Mike stated, we've spent a lot of time on these projections as we did previously with the audit. But one of the things that we want to try to put in place moving forward is some fund balance targets or goals, not just for the general fund, but continuing to maintain our targets within sewer and water, and then some of our non-major funds. As you can see on the first slide here, first line, general fund cash target, maintaining 12 to 18 months of operating costs. Good standard practice in the government space is 3 to 6 months of operating cash within your general fund. So unrestricted cash balance for whatever operational needs may arise. The village has historically maintained anywhere from 2 to 2.5 times annual operating expenses within the general fund. I know you all didn't have the audit in front of you to kind of review cash numbers, but you'll see as we go throughout the slides tonight, kind of where the general fund cash position has been and where it's trending. And the 2-year to 2.5-year mark in unrestricted reserves within the general fund, in my opinion, opens us up for potential for tax objections. Typically 2.5 times operational needs in any fund kind of opens the door for taxpayers to come back and object to future taxes. And Bruce may be able to speak more on that end of things.
I would.
But we want to try to.
Yeah, let me just jump in here for a second because I don't want to leave the board with too much concern about that. We've always had a very large general fund because we use that to backstop water fund, sewer fund, shortages in maintaining streets, and we had some very large potential capital projects for extension of the water system, for land acquisition. We've had drainage studies that were $2 to $3 million in cost. And historically, we would point this out. I haven't looked at the management letter, the village's portion of it this year, but we pointed out that we maintained the general fund in this fashion because of all of these other costs. And my understanding and talking to Trustee Clayton is that the recommendation is to move a large part of that balance from the general fund to the capital projects fund, because those types of costs that we were trying to backstop are really capital costs. We didn't establish the capital projects fund until the last couple of years. So I think if the idea here, the direction of the conversation is let's not keep an overly large balance in the general fund, but move it to the capital projects fund. I think it's a great idea, but we have tried to anticipate the kind of objections that come up because we have had this discussion in our management section of the audit each year explaining why we have that balance. And we have used it from time to time for those reasons.
I would say Bruce, that there's another aspect of this too, is that it kind of masks the ability of the village to invest in the future, because we're carrying all that money in the general fund, and it's not clear if what portion of that money is really available for investment and what portion needs to be dedicated to operating costs. So I think part of the rationale here is that this provides much more clarity with regard to what the funds are being used for going forward, and how well we are positioned to make future investments in new aspects of the village. So we hope to retain about 5 years of non-discretionary investment and maintenance expense in the capital fund. Non-discretionary, to just give you an example, maintaining Village Hall is non-discretionary. Putting a new sidewalk down Port Wine is discretionary. So if we can maintain 5 years of non-discretionary investment in the fund, then we will be assured that we'll be able to continue to run the village with the existing investments that we have. Just to give you an idea, the general fund cash target, 12 to 18 months of operating costs, would be carrying about 3.5 to 5.2 million in the general fund, which still is well above the targets, even by the Civic Federation and others who have looked at where the carrying should be. We've retained the sewer fund and water fund targets as they are today, and we are currently operating under the accumulation of the MFT fund to accumulate a balance for investment in the Saunders Road project. With these kind of targets in mind, we've also established a target for the operating income and deficit for the general fund. And for reasons that will become clear going forward, we really try to focus on a balanced budget for 2022, and then projected surpluses in 2023 and 2026. In order to produce that kind of future, we would need to raise the tax levy this year by 20% and then by 3% per year after that through the forecast horizon. Part of the reason for wanting to front end the recovery here is that all of our projections include Thornton's, and also there's a potential for reduced state distributions. So we want to fix the deficit sooner rather than later. This also allows us to have one rather than annual truth and taxation hearing. And the reason why, again, we focus on this is the story that we've told for several years now, is that there's fairly limited cost reduction and other revenue enhancement opportunities going forward. But we'll talk about some of those as we go through the presentation. So underlying what you're going to see in terms of numbers is this tax levy scenario and going forward, and the objective of a balanced budget in 2022 and surpluses thereafter. So with that in mind, here are the detailed projections for the general fund going forward through 2026. And I would like to start by just looking at the 2021 projections at this point and going down to the very bottom where it says a slight deficit of $6,561. This is a substantial improvement over the budget. It looks like we're going to end the year. The budget forecast a $215,000 loss for the year. And a good measure of the reason for the improvement here is looking across at the second line down from the top, the sales tax line. We're now projecting about $737,000 worth of sales tax receipts. The budget for sales tax receipts was only $565,000. In 2019, we had for the full year about $817,000. So we have made a substantial recovery in the sales tax. in spite of the fact that the pandemic has continued to linger on. To give you an idea of how this compares to what we used to get prior to the loss of the large sales taxpayer, in 2018, we booked 1.3 million in sales tax. So we are recovering, but we are still recovering at levels that are below what has been the historical level of receipts for the village. But optimistically, we're doing a little better than we expected to do. So that gives us a relatively good foundation for going forward. If I could now call your attention to the 2024 column, and what I'd like to highlight here are two numbers. One number is the Thornton sales tax number, which is the third number down from the top. And then the municipal motor fuel tax number, which is the second number up from the bottom in that year. That's $200,000 and $50,000 in total. And the municipal fuel tax is largely driven by Thornton's. So that's $250,000 a year that underpins these numbers. And if you go down to the bottom net general fund, in 2024, with these assumptions, we are forecasting a surplus of 159,000. So Thornton's in and of itself more than made up for a deficit that we would have run in that year to give us that surplus. So if Thornton's doesn't eventuate, we'll talk a little bit about what some of our options are going forward, but it's clearly a very important contribution to our forecast going forward. The net general fund, looking at this then, does exactly what we wanted it to do. We have a surplus going forward, although the surplus is declining as we move out to 2026. I think that there's always, the ability. One thing we know for sure is that these projections are wrong because the future never comes out exactly the way you have projected it. So as we move forward and we get into the outer years with these projections, assuming we continue to track like this, we can make further corrective action that will be relatively minor. So,
Mike, this is
yes.
Henry.
Yes. Go.
Why was the MFT zero for this year?
Why was the MFT zero? MFT
I think he's referring to the
zero
municipal.
because of
Municipal fuel tax.
the timing of receipts of the MFT fund. That's right, Russ, right?
I think the municipal motor fuel tax, we didn't put into effect until 2022, Henry. We had a delayed.
Oh, I'm sorry. Yeah, I thought you were asking about something else. Yes, we didn't implement that tax until January 1st, 2022.
Thank you.
Thanks, Bruce. Any other questions on the general fund projections? If not, we'll look at then the cash balances in the general fund. And a couple things to point out here. These are the top line here are the numbers you just looked at for the surplus deficit results. We are anticipating then making a transfer of, or we did make a transfer of $1 million to the capital fund this year. And we want to make a transfer of $3 million to the capital fund in 2022. That still keeps us well above the target for the general fund, and also funds the capital fund according to the criteria that we laid out. We also have the opportunity for a repayment of the TIF note going forward, but I don't know if you can see the numbers all the way on the right. My numbers are kind of hidden behind some of the icons, but we're still in 2026 with about $7.5 million in cash in the general fund, even making the transfers to the capital fund. And I think I would like to just convey the message that the village, in spite of its short-term operational difficulties, is in really good financial shape and will remain in really good financial shape throughout the forecast period. Let's look at some of the other funds unless there's some more questions on that. The general fund we've just talked about. The water fund going forward, that has a $2 million target. We have Thorngate Reservoir rehabs and water distribution system replacements that Pat has given us, those costs going forward. It's important to note that there is nothing in these costs for village participation in extending water mains. So the extent to which we decide to do that, should we decide to do that, that would be in addition to the funds shown here. But as we sit here today, looking forward for the water fund, we will stay just at the target of $2 million. With regard to the sewer fund, we have a $1 million target. We have sewer system OEM things, grinder pump maintenance and lift station modernization costs that are laid out here. And we also have, I forgot to mention that in the water fund, we've included the Buffalo Grove Interconnect. But anyway, with the sewer fund, we stay well above the target of $1 million to $1.5 million going forward. Any questions? Okay. This then is the capital fund, and a couple things to know as we look at the numbers. This is a scenario that is designed to put the maximum draw on capital fund cash. What that means is that we have put in here every project that the board has talked about, has conceptualized, so that we can see if all of those things happen, what would the impact on the capital fund cash be? That does not imply in any way that all of these things are therefore recommended to implement, or those are decisions for the board that are outside these projections. But we did want to include as many of these things as we can to make sure that we stayed in good financial shape in the capital fund. So going down from the top, starting with road and bridges, we've included costs in the Saunders cost for widening for bikes. But these numbers do not include any possible federal STP funding, which we will submit in 2022 and could reduce some of these costs. It also doesn't show, there's an error really, it doesn't show the $100,000 a year that we would get in the 2024, 2025, and 2026 periods into the MFT fund. But you can see that we have saved up about $800,000, well, $126,000 plus $800,000 for the Saunders Road project. With regard to drainage, we decided that what we would do is start with a focused project that would be spread over 3 years, where we could see what impacts we were having. And so we laid out $750,000 in total for some drainage projects. We also laid out sidewalk and pathway projects that would be hopefully funded by a $1 million grant, which we could use 80% for Port Wine to Deerfield sidewalk and parking linking to the Woodland Preserve. So that leaves us with sidewalks and pathways of about $220,000. The campus numbers include $175,000 for a nature play area. Rick was kind enough to get back to me with comments and questions before the meeting because he couldn't be here tonight. He thinks that number is low. And also we should include the improvement of the wood chip pathways that are to the west of Village Hall, which are not really wheelchair accessible, or as we have found out, stroller accessible. And so round out the rest of the pathways, which are indeed that. So we're probably looking at closer to $200,000 to $225,000 there. Village Hall and Police Station, that is,
Mike, well,
that is HVAC related. I believe.
Mike, this is
Yes, sir.
trustee Hollander again, before you go to the equipment.
You muted yourself for some reason.
I anticipated you were down at police under equipment. You're not. My
Okay.
question comes later. Sorry.
Okay, no problem.
Oh, wait, if I could, while we're still here under property, why don't you finish the property and then I have just a question comment at the end of property.
Okay. So the woodland management line, we got directly from our village ecologist. Pat does not believe we're going to need to spend anything on the water tower during this period. And the other category is an attempt to capture some funds for Deerfield Road landscaping and any improvements that we want to make at our cost on the CubeSmart intersection. So that's why those numbers are in there. Now, Bruce.
I don't know if this, in the thinking about the capital fund is the right place for it, but for many years, we've appropriated a large sum for potential land acquisition. I know the board has had a lot of discussions about when that's appropriate or not. But when we look at some of the commercial areas over on Milwaukee, we have had these kinds of discussions about looking at what could be done to help assemble sites for developers. So a potential use could be that the village general fund or capital fund at this point, I guess, I'm not sure which would be the correct place, would maybe make a loan to a TIF fund, because all of those properties are for the most part in the TIF funds, and we don't have any fund sources within the TIF fund right now to pay for an assembly. So I just thought I would mention that. It's a,
Okay,
maybe won't happen.
Western Nicole, where would we book land acquisition?
Sorry, I couldn't find my unmute button. Land acquisitions, I would propose be in the capital fund. General fund, we're going to want to try to restrict or maintain operational costs that we can compare and measure year over year. Capital fund is really for those purchases that are one-off or non-recurring.
With that being said, we have, even at the upper target of $5 million in the general fund, we have $2+ million that's sitting in the general fund that we could transfer to the capital fund for land acquisition. So if we're going to book it here, we would just make an additional transfer from the general fund. And once we make a transfer into the capital fund, we may realize that these funds remain unrestricted. So if for any reason we would need to move money back into the general fund, we can always do that. But this provides us better clarity and a better vision of the future. All right, I'm on equipment, Henry.
No, you answered my question. I'll do the other.
Okay. All right, the police department equipment, those little red triangles indicate that the chief has actually delineated exactly what the individual items are that goes into each one of these numbers. And it doesn't come across in a PDF form, but those are solid projections from the chief. Under public works, we booked $40,000. Pat thinks that perhaps we should start thinking about hydrant maintenance, and that would be those would be good costs for that project. And then we put in a flat $15,000 a year for just other equipment and other expenses that we have. We haven't itemized every computer that we have to replace or every printer or whatever. And this way we have a fund for making those investments. So at the bottom here shows the starting cash balance. We've booked.
Excuse me, Mike.
Sure.
Mike, if I could just add something here. You mentioned listing computers and those kinds of assets. We do have a proposal outstanding from Digital Currency, and they're going to work with us in listing all of our technology and, you know, servers and laptops and all that kind of stuff. So we've got a feel for what we have and how old it is and when that might start turning over. So that's out there, soon to be
Great.
received, I hope.
So looking at the starting cash balances, the ARPA grant that's shown there, we've already received the first tranche of that, $242,000. We're going to receive the second payment in next year. So we still have to think through exactly how we want to use that money. It's restricted in its usage. One of the uses is revenue replacement, lost revenue from COVID. But there's some conditions that have to be met in order to be able to use the money for that. So, but all the rest of the possible uses of the ARPA grant are uses that fit into the capital fund. It's infrastructure of one form or another. And then the transfer from the general fund we discussed earlier. So this is the capital fund balance rolling forward. And you can see that as we go forward, we're going to start dipping below where we want to be in the capital fund. And we'll think about some additional transfers in the future if necessary. Any other questions here? Okay, then we did look at opportunities.
Mike. Just a minute, Chief has a question.
Mike,
Yeah, sorry, I didn't hear you.
I'm on the previous screen. You started to touch on it, but I think then you got sidetracked. Where it says Village Hall Police Station under property and buildings, and then there's $30,000 for 2022.
Yes.
I don't, is it part of that actually the police station? Because I'm not familiar with it.
That I believe pertains, that's where we would capture property investment in Village Hall and the police station. I don't have a note in front of me as to what the $30,000 was for. I think it's an HVAC system, but I don't know.
I
if
did
that's
tell you about that. I
the police station.
That's got to be what it is, because I don't have my numbers in front of me, so I wasn't sure. Yeah, I did tell you for 2022. Okay, never mind, I got it now.
Okay, great. All right, so we looked at some opportunities for cost reduction. We have some limitations, and that is that half of our general fund expense goes to personnel costs. And any reduction in personnel, I mean, we are at the bone right now trying to operate effectively, address some of the concerns of the auditors, improve our processes and so on, and expand some of the services that we provide to our residents, such as social media and other type programs. And so we are kind of, if we try to reduce personnel, we believe, the Finance Committee believes, that would result in reduced services and really an inability to adequately operate. And so that cuts off 50% of the general fund for cost reduction opportunity right from the top. The police department, by my calculation this year, is about 55% of the general fund expenses. And we have no realistic alternative, even if we wanted one, which we probably don't, because we like what we have. But at this point, there is no, to get the same level of service from the county would be significantly more expensive. Or, as people who have lived here long enough know, there would be a major reduction in service and safety and response times and response effectiveness. So that again limits some of our area of opportunity. So we went through, and these are some possible areas where we could save some money. We could eliminate woodland programs, which is kind of fundamental to the brand of the village. We could eliminate the Village Voice, which again is the main communication mechanism that we have now. We could eliminate village parties. That's really not a material amount of money. Donations is also not material other than NSSRA. We've so far this year donated $1,237. And with regard to conversion of public to private streets, that has some opportunity, but that adoption was rejected by the previous board. So we've set that aside. So the Finance Committee believes that any of these things would change our quality of life and safety within the village and should be kept for emergency actions. So if we don't have much opportunity on the cost side, what opportunities do we have on the revenue side? First is, as we've discussed, higher police property tax increases. At this point, we did a 50% levy increase last year. We're proposing a 20% levy increase this year and 3% per year after that. We can go up to 4.99% in future years and not have to incur a truth in taxation hearing. But for the most part, I think, and we really haven't impacted our average homeowners very much. If you look in the appendix, when we get to it, the property tax increases that we have proposed increase the property tax, the police tax for the average house in Riverwoods by a cumulative over 5 years of $122. So these are not significant increases, and we can focus on more increases should the need arise. We could increase our fees. We haven't gone through an extensive review of fees, but I think Rick believes, and he should really talk to this, that our fees are now where they should be, and any increases in fees actually is kind of a disincentive to come and invest in the village. We could implement a real estate transfer tax, which I'll talk about more on the next page. And we could focus on new sales tax generation, but we have to think about where that might come from. If anybody else has any other revenue generation opportunities, we're happy to evaluate them. Let's look at the property tax increase as we have laid it out. And this is the third line under the actual levy amounts by year going forward. And the actual revenue increase to the village of those increases. And then we have here on the bottom right, and I think this is important to understand, even with these tax increases in place, Riverwoods still has the lowest tax rate of any of our neighbors, some by a very significant amount, our 2.2% tax rate. So we should not be making ourselves non-competitive. The increases seem affordable to me and to the committee, and it still keeps us in a good position relative to our neighbors. This is what a real estate tax would contribute. It could be a significant amount of money over a 5-year period. We just captured the number of transfers from 2014 to 2019 as illustrative of what the various rates per thousand would gain the village going forward. Implementation, I've always been told that implementation of a real estate transfer tax in Riverwoods would requires, first of all, a referendum, and would probably incur significant resident opposition, seeing as how the seller pays most transfer taxes. In addition to that, we would probably have significant realtor lobby opposition, and over time, perhaps a negative impact on property values. So our opinion in the Finance Committee is that this is a potential source of revenue. It would take some time to implement. And at this particular point, we don't see the need to implement a real estate transfer tax. But if the board felt that we needed more of a cushion against the risks going forward of Thornton's and reduced state distributions and downturns in the economy and so on and so forth, then we could build this into our program going forward.
Hey, Michael, this is Andy. Quick question. Do we know what other surrounding villages do or do not have a real estate transfer tax?
I do not.
There is a list. There's a list that's published by the Department of Revenue, which I might be able to share with Mike if you want me to.
Because if all the other surrounding villages have it, then it would become, probably less burdensome, right? And the realtor opposition may not be as much, but if we would be an outlying village, then it, would be a heavier lift, right?
Good point. We'll look into that and try to get some specific numbers for you. I know I just sold some property in Morton Grove, and they have a transfer tax that's $8 per thousand. So
Yeah, I mean, I think
If
from my
everybody knows
own
it,
knowledge,
yeah.
I think it's somewhat common, but not super
Yeah.
common.
All right,
Mike, this is Henry
Yeah.
Hollander. A couple questions on this.
Henry, I gotta tell you, you are just recognizable by your voice. You do win.
I just want to make certain I understand that. So in 2014, each house would pay about $1,000 to $2,000 for the sale of their home. Is that correct? 72
Well,
into 82 or 137?
Yeah, that's correct.
Okay. And I don't remember paying it. Maybe I paid it when I sold my homes. When does the individual see this tax?
At
I mean, is
closing.
it when they close and they've
Yeah.
got all these other numbers? I
It's-
don't see where this is going to be, someone is going to be upset about paying this tax when it comes into the hundreds of thousands at closing.
No, but you actually have to pay it if my experience is right. Maybe Bruce would know better, but you have to pay the tax in advance and then get a certificate from the village that you bring to the closing.
I think the way they do it most times now, people don't come up out of pocket with this in advance necessarily. They deposit the money with the title company. The title company will then procure the transfer tax stamp, and as part of the escrow, will attach it to the deed.
You know, I like Trustee Eastman's idea. If the other villages surrounding us have this in place, I think we ought to sometime over the next couple of months reconsider implementing this and maybe targeting the money even for the police fund. I don't think it's that onerous considering the value of our homes, and I would hate to be the only one who's not that doesn't have it in our area.
All right, so it sounds like an action item for the finance committee is to see what's going on in surrounding communities and come up with a recommendation for the board, which we will do.
Michael, it's Michael Haber. But it isn't really the problem here that it requires a referendum.
Right.
And
yeah.
so that's really the issue. I mean, I think we've talked about this in the past, that the implementation of the transfer tax seems to be a no-brainer. You know, as Trustee Hollander indicated, at the end of the day, when you're selling your house, if you wind up paying a couple $1,000s, it's generally insignificant. But the problem is you have to sell this to the community, and the community has to vote in favor of it for it to pass. So.
And just to add to that a little bit, part of the issue would then be how much cash are we carrying in the general fund? And if we have all this cash sitting in the general fund, why should we have to pay this tax? I think. But we'll look at, we'll do more research on that.
Mike, as you do your research, perhaps you can put it in the form of an offset to a potential property tax increase.
Okay. I think I understood that, but I'll.
Yeah, we can talk again. I'm just, yeah.
Okay.
Then I think there's another issue that I think we've talked about in the past, and maybe Bruce can give us a little bit more clarity on this. And that is, some communities have a fee that's really not a transfer tax, but it's like an inspection fee that before you can transfer your property, the property has to be in effect inspected by the village, and then the village issues its, okay for that property to be transferred. And there's a fee attendant to that inspection. I don't believe that fee arrangement requires a referendum, but we might want to investigate that issue as well.
All right, Michael, we will. This is what we recommend. We recommend that we adopt the new fund management policies that we've talked about. This requires a board resolution going forward, so hopefully we'll have it on the agenda at some point and have further discussion if the board wants it at that time. We'd like to implement the tax levy scenario. The 20% rise this year requires obviously board approval, and it also requires a truth in taxation hearing, and there's notice requirements and everything. And Bruce Hoovard is on the calendar, is on top of that, and is laying out a calendar for us to get to a truth in taxation hearing. So before, as we go through all of that effort, we do need to get a vote on whether this is what we want to do. I think that we're we're recommending that we try to implement the real estate transfer tax if the ordinance doesn't happen. And then also, in order to generate additional sales tax opportunities, we need to move forward aggressively with some of the development options that we have on the table, including the connector road from Deerfield Road to Colonial Court. We need to continue to aggressively push annexation opportunities, and then to pursue grants where there's just a new set of grants coming out from Rebuild Illinois Main Street, which is basically grants that will allow you to take your central commercial district, and improve it, repave it, improve the appearance, landscape, improve access, and so on and so forth. We've reached out to the owners of the shops and Colonial Court to see if they want to pursue a joint grant, and the village and they together, and they're considering that. I do think, given where we are with regard to our operating expenses, we can add some village staff functionality as long as we tightly control the costs. Property management is in progress. The grant acquisition and administration is on the agenda today. And social media needs to be improved in terms of our communication with the village. So again, I think that hopefully the message is that the village is in good financial shape. We do need to take some action to eliminate the deficits. The next steps now from here on going forward is to prepare a 2022 budget, which we will start sitting down with the department heads with some templates and so on within the near future, and also to begin to prepare whatever presentation materials we need for the truth and taxation hearing. And with all that being said, I would just like to acknowledge the assistance in all of this from Lauterbach and Amon. I don't think we could have gotten to this place. I know we couldn't have gotten to this place without their hard work and assistance. So I want to thank them publicly. In the appendix at the very end is, again, that what I said earlier about the 122.81 on the bottom left. That's the total annual increase, and it looks like we have a mistake on the thing, so I'll recalculate this because it has a 20% increase in 2021, 10% rather than 20, so we will correct this. Any other questions, comments, criticisms, suggestions?
This is Henry again. A couple of sessions ago, Trustee, I'm sorry. Trustee Haber talked about the idea of a village having a profit, whether or not we should be making money while we're taxing our residents. And that sort of resonated with me. I'm just wondering whether or not there's some way of averaging out a profit over 2 or 3 years and then taking that money and dedicating it to some way to enhance the village for the residents. I don't know what it might be. Maybe an increase in the campus, maybe putting in more paths, but certainly targeting any profit that we make over a period of time. And I think if we're going to be taxing people and making profits, that sort of bothers me if that is more than just a year or two. So I just bring that up as something I think we ought to consider as a public taxing body.
You know,
Okay.
if I may, just one of the issues the village has had historically is that we have a lot of great ideas, but they sometimes run into user pay issues. So for example, we know there's a lot of the village that's unserved by water. Well, if you think about using some of these funds to help with that, then we start running into, well, is that a user pay situation? So the village wants to be, because we have other people who've already paid for water. We have this issue. We have had this issue many times, that if we wanted to explore there are some large scale projects the village could consider, and that might be something for the board to look at. I mean, I think that the mayor has talked to me about extending water through the balance of the village. That's a huge undertaking. We know the cost of that is $14 or $15 million from the last estimate. So those would be things that the board could explore if you're looking for a use for the money. Staff has uses.
I think, if I understand, Henry, what you're saying, I think the idea that we would take excess money out of the general fund and put it into the capital fund is doing exactly what you just said. Only instead of focusing on the surplus or deficit in a given year, it's the accumulation of those funds in the general fund over time and then transferring them into the capital fund for all the uses that you just mentioned, things like improving the campus or those kinds of uses. So I kind of see that as the same thing. I don't know, Wes, if you have a different interpretation there.
I think the only thing that's different in my mind is how we refer to that excess revenue in a given year and not necessarily profit. A lot of this conversation is geared towards what's happening in the future. And as Mike said in the beginning, today, tomorrow, and next week, these numbers are already wrong because we can't predict entirely what the future brings. And you guys in the past have done a good job of maintaining fund balance and having cash on hand for the unknown. So when we look at having some excess revenue in any given year, it's the goal would be to not continue to increase those general fund balances, move those dollars into the capital fund, and spend more time and energy on what that long-term capital plan is and building out for a $13 or $14 million, water infrastructure project. And I know that we don't necessarily want to fund that with tax dollars, but the reality of it is the size of that project, water bills would have to increase to a point where nobody would want to pay for it to cover the entire project. So I think it's going to be important to not have a profit, but have balanced budgets with a little bit of excess revenue to cover those long-term capital needs of the village.
Anything else at this point? If not, then I'll turn it back to you, Chris.
Okay. It's about 20 minutes to 7. And I am going to suggest, if the board wishes, that we take a recess at this point. Maybe we think about what we've just heard. Maybe we eat dinner. Unless you want to keep moving forward or make the recess shorter. I think normally people are expecting to chime in at a 7:30 board meeting, and we started a bit earlier today. So unless I hear otherwise, maybe this is a good time to take a recess.
So moved.
Henry? Oh, Michael, I'm sorry.
Are we taking a recess or just reconvening at 7:30 at a board meeting?
We're in a board meeting now. We're just recessing the board
Yeah.
meeting and reconvening at 7:30.
Understood.
And that's so moved.
There's a second for that recess.
Second,
I think we'll take a roll call because roll call, please.
Trustee Clayton,
Aye.
trustee Dickon,
Aye.
trustee Eastman,
Aye.
trustee Haber,
Aye.
trustee Hollander,
aye.
trustee Jamerson. Thank you.
Just for clarification, I think it's not going to be necessary to dial or click back onto Zoom. This is going to continue. We're not going to record it necessarily while we're away from the camera, but I think if you just leave your system on and you can just come back at 7:30. Is that right, Daphne?
Correct. You can mute yourself, stop your video. I'm going to pause the recording.
Okay. We'll see everybody at 7:30.